What's good, y'all? Banger ass fucking day today. Let's get this going. We got 3 trades today, actually, with the Gator strategy. And if you guys are new here, that's the kind of new model we've been working on. That's a variant of the momentum model that I use every single day, but a more mechanical version of that. Because a lot of you guys had not issues, but I felt that it would be a lot easier for you guys to learn my strategy if I was able to make it more mechanical. So I did some research. I found ways to do it mechanical, and then I came across the Williams alligator indicator, and I saw different ways where people implement it, and I found a way that we can implement it. But it eventually led to me building kind of a variant of the momentum strategy, not kind of implementing it into the momentum strategy. I'm still implementing it into the momentum strategy a different way, but the way we trade now the alligator, I found that it's like a pretty good strategy we can also implement that's kind of similar to how the momentum works, but it's a more mechanical version of it, which I really want to share with you guys because I've seen some really good results from it, and we took trades from it with it today as well. 3 trades, and we're up like what, around $7,000, almost $7,000 on the day, or like 65, 8,000, I don't know, around there, 6,500, 7,000, somewhere there. But these are the trades we took, the entries and exits, and this was the PNL from these trades right here. Now, going into market, today we decided to focus on purely the Gator strategy. For now, it's called Gator. For those guys who are already like involved, you guys know the slang, but I don't want to, I feel like that's a weird name, Gator. I might want to change that to like something else. But for now, let's keep it Gator. Screw the name. I don't care about the name right now. But going to the market today, we had 3 trades with the Gator strategy. That's what we're focusing on today. 3 bangers. I'll make a separate video as well breaking down the strategy. This is going to be just a trade recap of today's trade. So I'll briefly go into how it works, but a full breakdown of how it works will be made in a separate video so I can break down the ins and outs of how it works. But going to the market today, we saw the 30-second sloping up and price was below it, so it was a little inconsistent. So I was like, I'm really leaning towards a bullish play because the 5-minute was also bullish for over the long run, and the 30-second was, the price action was also bullish, and we were still having a bullish sloping SMA, and the 1-minute as well had a bullish sloping SMA as well. You guys can see on my top left. By the way, 30-second is the time frame that I take my entries on, if you guys don't know. 1-minute is on the top left for kind of a little slightly zoomed out picture, and the 5-minute is on the bottom left for a little more zoomed out, bigger picture. Now, we had all these sloping up SMAs, but I wanted to see price also hold above it on the 30-second for a bullish play off of this SMA Williams alligator, off of the Gator, we'll say. All right, so as we were pumping and we got some bullish consistency, we saw some signs of bullish momentum or bullish movement. I'm so used to saying movement or momentum because I trade a momentum strategy, but this doesn't really rely mainly on momentum. It does have momentum within the trend, meaning in the way that we want to see a really strong direction in trend. We don't want to see a weak trend, but we don't enter off of momentum in this one. We enter off of any candle. So we saw some continuation to the upside, bullish continuation, and we're holding above the moving average line. Moving average line is sloping up on all the time frames, which is great. All we wait for now is a pullback in between the green and red SMAs, meaning we want price to wick into there like this, or close into there, doesn't matter. And then we want to see a green candle closing out of the green SMA. Okay? And that would validate us for an entry. We would enter our trade on, for example, a green candle that closes out. We put our stop loss. Let's say this was the lowest point. Let's say price came back into here and then turned around. A green candle closed right where the arrow ends. And this white line was the lowest point the pullback ever went to. We put our stop loss at the lowest point of the pullback. We enter right when the candle closes outside of the green SMA. And we take profit at the swing high or a minimum of 1-to-1 RR. Same take profit style as the previous strategy for now. Now you guys can also play around if you guys want to see like higher RR. I haven't tried higher RR take profit strategies or trailing take profit strategies, but you guys can definitely try that out, see if it works. Because I do see some of these trades run for a pretty long time, especially the trades you took today. They also ended up running real nice as well. So you can definitely test that out. If you notice that maybe higher RR will work better. I feel like it might, but I like having a consistent high win rate with a regular okay RR, decent RR of around 1 to 1.5, almost 1 to 2. So That's what I like to see, but I haven't necessarily tested it. Maybe you have a high win rate with a high RR as well. That'll be interesting to see. Maybe we can even test that, but we'll save that for later. For now, this will be what our entry would have been, what I wanted to see, but we decided to break past the red SMA, and once the price breaks past the red SMA, that invalidates this pullback. That means the pullback is too strong. Even if price has to come back up to here and enter the green and what's it called? Enter between the green and red SMAs and give me another entry, I'm not going to enter. I'd want to see a full continuation before I look for another pullback. Okay, this invalidates this. So if we decide to come back up to here and close above the green and red SMAs, I'm not entering because this pullback was invalidated because of how strong it was. Okay, now this red SMA is kind of like that protection. That green SMA is like our confirmation that we're ready to continue the trend. Or we close out of that. Now, us wicking past or closing past the red SMA pretty much invalidates the setup. Originally, wicking didn't invalidate it, but it seems to be that wicking the red SMA makes the trade a lot lower quality. So we're going to not take those either. Or if we do, we end up going really low size, but we're probably not going to take those. Closing through the red SMA invalidates it 100%. So we want to see continuation before we look for another pullback and continuation play. So we ended up dumping all the way back down, breaking past these lows. I'm like, all right, SMA is now sloping down. Price is now below it. And on the 1 minute, we're also below it, but we're not quite sloping down yet, which is fine. I don't necessarily have to worry about the 1 minute SMA sloping because I haven't seen any correlation between the 1 minute SMA sloping in our direction or not. I just want to see price also below the 200 SMA on the 1 minute and on the 30-second as well, like correlate that way. On the 30-second, it was under it as well, and the SMA was sloping down. Perfect. 1 minute was below it. 5 minute, let me see where. 5 minute, we were slightly above it, which honestly I haven't seen much correlation on the 5 minute. We might not even need to include it. I just look at it as kind of a bigger picture to see what the price action is doing on the higher time frame. Instead of me having to zoom out on the 30-second, I can just quickly glance at the 5 minute down there. That's why it's a lot smaller. Now, we got that. Move down. Okay, perfect. We broke past this low, which is what I was looking for confirmation to the downside. We got a pullback. Now all I'm waiting for, you guys already know, is a pullback coming in between the green and red SMA, which is exactly what happened. We first got a trade off of this original black candle that tapped in between the green and red SMAs. You see that tiny wick, that counts. We tapped in there. We got a black candle closing out, a bearish candle closing out, which is exactly what we need. You can tap in there and close out on the same candle. That's totally fine. Or on a different candle, doesn't matter. But we need to enter on the candle, the first candle that closes out. That is a bearish candle, aligning with like the same direction we're trading. If it's a green candle that closes out, we're not entering. We have to have a black candle that closes out for bearish and a green candle that closes out for bullish to the upside. So we enter, stop loss at the highs over there. Our take profit goes at the low all the way down here. And we have a nice 1 to 6 RR trade, which would have played out beautiful, but we got wicked out of this trade right here. Hit our stop loss before going down. Normally, if our trades are bigger RR, we set our RR to break even after 1 to 2 RR. Which, yeah, we got really close to that. But anyways, we ended up going to stop loss first and then coming all the way down here. So we got stopped out on this first trade for a really, really small loss, only 5 points. And then we got another second entry off of this one because this trade is still valid because we never broke past the red SMA or wicked past the red SMA. Even though we stopped us out, that doesn't invalidate us. Our invalidation is past once we wick past this. We just want to make sure our stop loss is tight enough so that we don't leave our stop loss hanging for a really long period of time. Okay, so our stop loss is placed here. We got wicked out. We got our second entry right here with our candle closing out and our entry on the candle close. Our stop loss goes at the high of that candle, the high of the not high of the candle, but the high of the pullback, which happens to be on the high of the candle. Our take profit will be placed at the swing low for a simple 1 to 1.44 RR, and that smacked our take profit. Perfect. Beautiful. That was our main winning trade for the day. And then we also had this second opportunity. Let me put this other trade back as well. We also had this second opportunity as well. Right here after we pulled back and came into the green and red SMA, in between the green and red SMA. And we got a black candle close out. Perfect. We're going to enter off that. Hold on. We're going to enter off that. Our stop loss goes at the high of that pullback. And then our TP is going to be set at the bottom of the swing low. So you guys can see this trade hit take profit. But we have a rule where we move our stop loss to break even after the trade moves 1 to 2 RR in our profit, which it just barely did right here. Like, wait a second. Dog, that looks like it didn't hit it, but it literally, it says 1 to 2, but it looks like it didn't hit it. I don't know why, but we ended up getting stopped at a break even because our thing was right there. Our break even line. And we came all the way back and stopped us at a break even after moving 1 to 2 RR in profit. Okay? Because once the trade moved 1 to 2 RR, stops move to break even. And it's a risk-free trade now. It's all just how much potential does this have to go to our TP. And it ended up stopping us at a break even and then just went to our TP. So 2 trades that got stopped out and go to break even, or stopped out and go to TP, but we had one beautiful winner. Amazing trade. So, I mean, that's part of the strategy. There's going to be times where this break even rule hits our break even and then goes to TP, and there's going to be times where it goes to break even and hits stop loss. Yeah, I make like emotional jokes about it, like, oh, I'm annoyed, whatever, but obviously I know, like, deep down, it's just part of the statistics. Some trades are going to be protected from a loss. Could have been a loss, easily could have been a loss, and we would have been protected. Other cases, very few cases, it'll go to our TP. That's the trade-off you make with adding a break-even stop. It's not always going to help you. There's going to be times where it goes, hits your break-even, and goes in your favor, but you also have to understand it's protecting you from the times where it's going to hit your break-even and go straight in your stop loss, but you didn't lose money because you protected yourself. So it's a trade-off you're going to make, and it depends on strategy to strategy if it's actually helpful or not. For this strategy, from what I've seen, it is pretty helpful. Since sometimes we do have bigger RR trades, it does help to have a break-even stop. But I counted this as hitting the 1 to 2 RR. I'm fine. I'm totally fine with that. We had a nice winning trade earlier as well, so I'm fine with that. This trade did end up having a good idea as well, played out nicely, which is good to see as well. So you could hit the take profit around there and continue dumping for a little bit longer. Now, you guys can play around with trailing techniques if you want, whatever you see fit. I haven't played around with it too much, but that's all we saw for today. The rest of the time, we were literally straight up just chopping our way, like doing a whole lot of nothing. We did get off around 8 my time, or a little past 8, and then it was like 11 a.m. Eastern. We didn't really have any opportunities because I'd want price to break past this low to continue and show some signs for a continuation in the downtrend. Since we broke past the red SMA right here, I want to see it continue the trend, but we didn't get that. So we ended up flipping bias right here, all the way over here, but on the 1 minute we actually stayed below it, so that's not quite good. Yeah, so 1 minute we still stayed below it, so I wouldn't have looked for a trade. And yeah, there's no other trade until our end of our trading window, 9 a.m. my time, 12 p.m. Eastern time. So today was a pretty successful day. We had followed our rules. We had also 1 winner, 1 loser, and 1 break even, and ended up netting us 7K profit, which is beautiful. Love to see that, up like 1.4 RR on this, almost 1.5 RR on the day, which is good. Solid. So that's pretty much sums up today's trade recap and market recap. If you guys have any questions about the strategy, let me know. I will be making a video breaking down the strategy soon in the near future. Stay tuned for that as well on the YouTube. And with that being said, I'll catch y'all on the Discord. Let me know if you guys got any questions in the comments or in the Discord if you're also in that as well. I'll catch y'all in there. Peace out, boys.